Hey, thanks for tuning in. This video, we're going to take a look at breakout trading and how we participate in these type of trades. First, I'm going to look at what is a breakout. How do we confirm the breakouts? Where do we put our stops? The entries, in time and in price. The profit targets that we're looking at. And how we incorporate the basic trend following techniques into utilizing a trailing stop. I'll also talk about market symmetry in the profit target section. So let's take a look at what makes a breakout. First, I'm going to point out, just this indicator here that I like to use. Topped out back in August. She continued higher, put in this doji, fell to the 40, put in another doji, kind of oscillated around the 40, came back up to the top, put in another doji, went sideways for 4 weeks, and then broke above. So that, that's in layman's terms what's happened since this past February. And looks like a big cup, right? A big cup and handle. Trend follower would say, well, she, recaptured the 20, started trending, never looked back. But a breakout really is just anything where price breaks out of an actual support or resistance. In this instance here, we had a trend line that broke out. We also have a horizontal line that broke out. And this is a correction that really started back here. So I'm looking at the weekly chart of ServiceNow, which I do have as a stock that is in a buy the dip configuration and is trending higher on the weekly and will likely remain trending higher for quite some time. Some profit targets, confirmation, stops, etc., are all going to be on the weekly time frame, right? So this is a weekly breakout, so we're using the weekly time frame. We can use the daily time frame to improve our entries and improve our exits, but from a setup, this is technically a weekly setup. And we do have one weekly close above 598. So we have some form of a confirmation, right? We've closed a candle above. If you look at the daily chart, there's a lot of confirmation. There's a lot of daily closes above. But on the weekly chart, there's only one candle close above. We're on the second candle right now, and it's still open. It hasn't closed yet. But in order to confirm a breakout, I like to see a couple things. I like to see, at most, volume, a couple candles, 2 or more, at least 3 to 5% above the breakout level and holding. All of that would be like best case scenario. What you typically get, though, is by the time you have all that information, you're way into the trade again. So what you have to do with these is zoom in to the time frame one lower than the chart you're playing. In this instance, that's the daily. We're playing the weekly chart. Look at when she came up to this and broke above. So you could argue that 820 was the first close above. The very next day, you could market buy it open. That was August 23rd. You could have also bought the third day after 2 closes above. All of those are valid entries. I would say buying day 4 of a breakout is pretty late. So that's not my style. But any of those 3 days are valid entries. Your stop for those would be acceptance below the breakout area, 598. So you're talking about 4%, not too bad. And ideally, you would see this move play out rather quickly. and it started to. So we've got our stop, right? That's 598. We've got the entries. The time in which you enter is, what I like to do is day 2. So if close is 8:20, day 2 is 8:23. You're buying that day. Market open, buy. And then your stop is as close to 598 as you can get. Let's go back to the weekly. So we want to look at some profit targets, and then we'll talk about the trend following aspect to how to get out of this trade. So we're playing a weekly chart. This can certainly trend for a long time. Some profit targets that I have, though, are simply the inverse of the bear move. So I look at this like an ABC correction, like that, and that when this cup gets filled, which it has already, that the measured move becomes the inverse of the cup. So I just took this rectangle, pulled it up here. You got about $800 profit target. You also got the psychological level profit targets that you can use, right? So she's at 650, 675, 700, 7.25, 750, stuff like that. But again, the targets aren't going to help you too much when a stock's at all-time highs. So you have to know how to follow the trend until the trend is done. And this is how you make a ton of money with these breakout plays. So if you look at the daily chart, this posture can continue for quite some time. Any pullback into the orange daily SMA 10 is for buying. Same thing on the weekly. Any pullback into this $600 level is a buy. So how do we know when it's over? Well, there's a couple clues that we can look at. Ideally, the weekly chart, we're playing a weekly pattern. We'll lose the yellow and orange line. So got to give up SMA 10 or EMA 5. And in some instances, the blue line. So really, it depends on how aggressive a trader you want to be, right? Because you could sit and say that this is still in a long-term uptrend going back 10 years or however long this has been going on, right? 2016. All these dips just keep getting bought. So the trend is up. It remains up. As a trader, I like to focus on the PPO. I like to focus on when we see a bearish cross. I like to look at when simple moving average 20 is lost. All right. So right now that's at 544. That's way too low. My stop's at 598. So that's way too aggressive. So if I were to zoom into the daily time frame, I would say that SMA 20 is simply the trend indicator here, and the blue line here have been holding as demand since this trend started. If you lose the green or the blue line, it's time to go. Also a PPO cross on the daily. But again, your weekly trend remains up. And as long as the weekly trend remains up and at all-time highs, she'll probably continue to print all-time highs. This has happened for a long time. So the whole goal is to ride this out at least until you get a sell signal on the daily at minimum. But if you really got patience until she sells and kicks you out on the weekly. And that's how you breakout trade these. If you don't like that time frame, you can certainly pick a smaller time frame and trade a daily chart and then use the hourly to help with your entries. But this type of trade out, this type of breakout, a 5-month, 4-month consolidation pattern generally leads to a nice explosive move. And these are the ones that I like to look for. So yeah, that really wraps up the video. If you have any questions, let me know. If you like the content, hit the like button, subscribe, check us out on Twitter, MarketWizard87, and I'll see you in the next video.